Good afternoon, everybody, and welcome to our panel discussion about ESG and tokenization. My name is Nicolai Bastian. I'm working in the venture capital industry for 10 years now as investment manager at neosfer, the early stage venture capital investor of Commerzbank AG. And today I have the honor to moderate our panel discussion here at Frankfurt Digital Finance. In this session, we are going to discuss the value add and the challenges between the combination of our two headline topics and how we can adopt them in the financial industry on a larger scale. But what does tokenization and ESG actually mean? So ESG, or environmental, social and governance, is a term that has been gaining increasing recognition and relevance within the financial industry as investors and consumers demand responsible and impactful investment opportunities that align with their values. ESG encompasses the environmental, social and governance aspects of a company or project and are seen as long-term and critical indicators for long-term sustainability and success. So the second part of our headline, namely the tokenization or the process of converting traditional assets into digital tokens, has been one of the most exciting and rapidly growing areas of finance and technology. This is not only because tokenization has the potential to democratize access to investment opportunities, but also reduces friction and costs while parallel increasing transparency and efficiency and facilitates new forms of investment opportunities. If you now combine our two headline topics. So this together has the potential to create a powerful and transformative force for positive impact within the financial industry. The result of our combination of ESG and tokenization, namely the ESG tokenization projects, aim to leverage the benefits of tokenization to finance and invest into projects like, for example, renewable energy, sustainable agriculture, social impact, or environmental conservation. The tokenization here can provide new ways for investors to align capital with their values while also promoting a positive ESG impact. Yeah, and today we have a group of experts here on the topic who will share their experience and insight on our headline topic. And I also encourage everyone from the audience, if you have own view on our headline topic, feel free to raise your hand. Give us your view or ask questions. And yeah, let's get started towards our panel discussion. And we will start with a quick and brief introduction of all our panel participants. So would you be so kind, introduce yourself and your company, what you're doing there?
Perfect, yeah. Thanks everyone. I hope everyone can hear me all right. My name is Saul. I'm leading the efforts regarding the strategy of digital currencies and tokenized assets for the German Savings Banks Association. For the international audience, the German savings banks represent roughly 50 million retail customers, 2 million business customers, and were founded more than 200 years ago with the sole promise of sustainability, empowering the individual, the region, and the society as a whole. So sustainability is one of our core values. So we appreciate being invited on this panel for that. And obviously, tokenization is something that I've been working in for quite some time. That obviously touches everyone in the audience, I guess, in the financial service industry. So yeah, I'm happy to discuss in this panel both of these interesting topics. So
cool. Thank you for having you.
Yeah.
Hello, my name is Evgeny. I'm CPO and co-founder of iVE.ONE. We are located here in Frankfurt, and what we basically do is we are providing digital asset infrastructure to financial institutions for basically two use cases. The first one is tokenization of assets, so what we actually want to discuss today, and crypto trading, so basically also cryptocurrencies. On top of this, we built also a product which actually provides ESG scoring on cryptocurrencies, and this is actually also what we can talk about today, how far are people interested in actually seeing those ESG scoring on their portfolios of crypto, or maybe later on also on tokenized assets. We're working with banks, neobanks, and basically other companies which want to tokenize assets. Yeah, that's it from my side.
Cool. Thank you.
Hello.
Peter.
Yeah. Hi, my name is Peter Lange. I co-founded Sustaim, where we offer extremely transparent emission compensation to companies. And we do this by helping them to pre-finance different sustainability projects. To maybe illustrate this, right now, if you're a company and you want to compensate emissions, one option is to buy carbon credits directly on the spot, where you often buy these credits from projects that are a bit older. We do this by helping companies to invest in these projects directly. So basically, they help making these projects possible in the first place, and we support and basically go along with the projects for the full investment horizon. And the reason why I'm here for tokenization specifically is that actually the carbon markets are one of the industries that might be the first one of the first that is completely moving onto the blockchain. So the way the industry is built, a lot of the carbon certificates right now are planned to be tokenized or go onto the blockchain, and there are a couple of stakeholders in the market that are very powerful or that have a lot of impact in making these decisions regarding regulations, for example. And there's a lot of planning going on in that direction. So pretty much every company, including us, is already planning with integrating projects, and specifically for us, this means that we, for example, tokenize some of the carbon credits or future carbon credits that we work with.
Thank you.
And for myself, my name is Christopher Lang, and I work for Tokeny. So I'm on the tokenization side. Basically, what we do is that we are a SaaS platform on a white label. Everything can be actually triggered by our technology through APIs. What do we do is that we work with clients, same clients here, AMs, fund managers, but also all kinds of companies that would like to go for traditional finance and digitalize it to the blockchain. We are agnostic to the blockchain, but we developed what we call a standard. That is the ERC 3643. I will just come up on that first with a twist. That is actually we bring compliance to a system. And so we actually whitelist the wallets of our users, but also we create on-chain identities for each one of them. So this is what I'm going to talk about today, and basically how to bring assets and tokenization on the blockchain.
Cool. Thank you very much having you all on our panel. And I think before we start talking about tokenization within the ESG context, we should elaborate a bit about what's wrong in the current financial system and why there is a need for tokenization at all. Maybe Saul, would you like to give your perspective on this?
Yeah, as I mentioned, I don't view the savings banks as a traditional financial institute. I think your parent company, Commerzbank, might be the better partner for this. But no, I'm happy to take it in regards of what's wrong with the financial system. I think short-termism is a big thing. If you're driven by quarterly results and earnings calls, this leads to bad management decisions. And I think this is an overarching theme. All right. Mm-hmm. Probably the biggest in my opinion, but happy to discuss. Yeah, maybe a further view from Evgeny. You're working with larger traditional institutions with iVE.ONE. What's your experience and about their needs there?
I think the interesting part, I was in this morning actually wondering if I could look up ESG score on my portfolio within. I have because I'm product, right? I have a lot of installed, and actually, while I'm investing in stocks, funds, ETFs, and so on, I don't see any ESG scoring on the portfolio right now. So the question is why, right? And this is the first problem that actually people are not seeing it right now. And maybe this visualization is not there. Is also because you have to understand how to calculate. And the calculation, what we see previously with all the greenwashing scandals and so on, is basically that, from my opinion, so I'm an IT guy, I have computer science degree and so on, and I believe to feed the model, if we have regulation define the model for ESG, right, for all the three pillars and complementing portions which flow into this, you have to have a really reliable data. And right now what I see that for a lot of financial products the data is reported by issuers, and sometimes it's not very reliable, or could not be always be reliable, or can be adjusted towards ESG ratings. And with all digital finance based on blockchain, I see that this data can be made more reliable because it's more transparent. So this is like, I think, maybe the question regarding what's wrong right now. And so first we need to have reliable data. Second, build a nice model which actually reflects ESG scoring. And the third point is actually you have to make this data accessible to their final users, so they can actually make portfolio decisions based on maybe ESG preference.
Mm-hmm. Okay, thank you. Any further comments from Christoph regarding this? Because you also are handling larger corporations that are facing the same problem, like iVE.ONE, for example.
Yeah, what I wanted to say, just to answer your question at the beginning, was the inefficiencies of the system. What I think is the biggest one is the lack of transparency. This is what we are having here today, is that at the end of the day, what we are trying to do, and I just said in the past, it's not happening with the greenwashing and everything, it's a lack of trust. More you're transparent with your data, or more you're transparent with what you're doing, more trust you're building at the end of the day. And so this is what actually blockchain is bringing, because you're decentralized. I'm not talking about private or public, I'm just saying blockchain in general. You're in a decentralized way, so you actually don't have a problem of governance. And in the same time, you have interoperability. Sorry, I don't know how to say that in English correctly, but you're going to have with the French accent anyway. But you guys understood what I said, is that once you change one point of the data inside of a decentralized exchange or decentralized blockchain, you're able to actually change in the simultaneous way all points of data. And so what does this bring? Transparency and trust. And that's what I wanted to bring on top of that. I don't know if I answered the second question at the beginning.
All good. I think you're pretty good matched. My second question, but I got an additional question for Peter. So, how are traditional financial institutions responding through on the rise of ESG and tokenization? Do you notice an increasing demand from larger traditional financial institutions to your company?
Definitely. So I would say generally, of course, there are two topics, ESG and tokenization. And then, of course, you can combine them, for example, by tokenizing carbon credits with us specifically. But I would say generally the interest regarding ESG is, of course, growing very quickly. I mean, this is why, for example, we are talking about this right here now. And there's a couple of other panels about ESG. So this is becoming a really big topic. And regarding tokenization and maybe the combination of both, I think that the whole idea of tokenizing, for example, sustainable assets is very, very interesting to companies, especially because of what you just said, because it brings trust. But on the other hand, we've had a few scandals in the past with, for example, Luna or FTX. And what we see is that a lot of companies right now are partly at least very careful about what specifically they're supporting, just because they think, okay, we have the time at our company. We rather, if we, for example, want to invest into ESG assets, we rather want to do this right. And we do see the potential of blockchain, but sometimes they're more careful now than maybe 1 or 2 years ago. But it's very, very difficult to generalize this, just because like every company is responding differently to this. Also regarding their industry, for example.
I think Chris had some further point.
Yeah, just bringing a point on that, I completely agree 100%, but the only thing about FTX and Terra, and I don't want to bring this subject to the crypto side, is because they're centralized. And it's because at the end of the day, they were bringing whatever is tools in order to actually decentralize ways in saying like, we are having backdoors using the system, but we are centralizing the system. So what we are talking about here, tokenization, it's about opening actually the data, and so being more transparent so everyone can actually see it and exploit it. And so by exploitation, I'm not saying in the negative way, I'm saying that you have the possibility to check and trace and be accountable of the information there on it. And this is what the ESG is all about. At the end of the day, I want to be able to invest on something that I will be able to track or have companies like the ones that were here. I don't know if you guys were here for the ESG data before. It was extremely interesting because those companies are building actually trust in this segment. They were not talking about tokenization, unfortunately, but I think that this is what is bringing at the end of the day. I want to be able to track those people that are not doing what they said at the beginning, and I want to hold them accountable for that. And I think that this is what tokenization can actually bring.
Yeah, so
maybe one point touching on Chris, since you mentioned Terra. I think we saw that algorithmic stablecoins, essentially backed by nothing, is a totally different animal than a real asset that you tokenize, right? So I think that brought a lot of clarity to the mind of the industry. And I think one aspect that we didn't touch upon is the aspect of democratization of illiquid asset classes and making them accessible for not just the high net worth investors, but also the average Joe, so to speak, that now can invest into properties or clean tech and whatever. So I think that's also one point to add to Chris.
Yeah, that's also a really good point to catch up with. Peter, can you share some real world use cases that we get an impression what are typical projects that can be tokenized that had been illiquid asset before tokenization and are now accessible through this technology?
Yeah, so for example, if you have a reforestation project where you want to plant trees to remove CO2 from the atmosphere, in the past how this worked was there's a verification company coming in and calculating the amounts of CO2, and then there's a unique registry that mostly belongs to the verification company, where these carbon credits, for example, are stored. And the problem is now you have this centralized registry where all these carbon credits are, but you can't really do anything with that other than show who owns the carbon credits. And this is a very fragmented, there's a lot of fragmentation in this market because you have these different registries and nothing is really in one combined in one asset. Now with tokenization, what you can do is basically attach a token to these carbon credits, and now these tokens, for example, can be traded regardless of the registries. If you have a registry that supports that, you have a token and that can go to a different wallet, and this can then be shown on the registry as well, but you're not dependent on these centralized registries anymore. And then if you think further, for example, you can integrate these tokens into an API. So maybe to give an example, you have a checkout system in an online shop, and there you could, for example, then click a button where you say, okay, I want to compensate for my specific order, and then you could have a token attached to that, and this token on the blockchain could show with your order, for example, what carbon credit was bought or sold for this specific order, because you have all this data transparently on the blockchain. And basically, specifically for carbon credits or ESG, I think tokenization enables to connect different markets and different projects in a system, and then also, like you said, really show the transparency verifiably on the blockchain.
Just one question to stick up here. Has any of you experienced the allegation that the tokenization is simply a tool for greenwashing and marketing rather than driving real ESG impact here? What is your counter argument against this? So maybe Peter, you first again.
Yeah, I mean, I don't want to talk all the time, but I see that. So, like we just said, basically there's a difference between what tokenization can bring to the table and then the issue of incorrect input data. So I think tokenization as a whole is a very, very good system if the input data is right. And I think that there is a valid argument to be made against tokenization as a pure marketing tool, because tokenization alone is not sufficient for ESG to provide good input data. But if you have the input data and then that is good and you can prove that it's good input data, and then you use tokenization, that is a huge benefit. And I think what has to be done for this is to just clearly show what tokenization actually means and what it can provide and what specifically it can bring transparency to, and then it's a very, very good tool. And yeah.
Cool. Any further views on this? Any further comments?
Yeah, I have. So we have to think where the data currently stored, right? And those are databases with corporates or data aggregators, right? And the one thing, what I think about blockchain is actually it can actually democratize the data and make it really trustful, as Peter mentioned, and Christoph, I think this is where we have to think about what data do we want to see, right? With all the assets we actually tokenize. And right now, I don't see any other system which is that trustful, or which can be made that trustful from the technical perspective than blockchain. And I think the criticism maybe could be what is not blockchain, actually not, like, for example, Bitcoin and so on. Everyone says it's dirty, it's polluting the planet, which could be true, right? The thing is it's not like contradiction to what we're talking about now. So we use actually a dirt technology to make the world better, right? But if you see first, like, Bitcoin is like one use case, Ethereum it's the second, and as you all know, they switched to another proof of work to proof of stake concept, which reduced dramatically the energy consumption. You see that actually the technology, first you thought it would be very, very dirty, and now it became cleaner, and maybe it will even provide more trustful data, more transparency for issuing of those securities and so on. This will be like a really interesting use case, but it's the one thing. Another thing is actually, what do you compare blockchain to? Is it like holding all the data into the databases? If you see how much power consumption in the financial industry actually uses per year, it's also like another thing. So there's a lot of questions actually there to what do you compare the technology, the power consumption, and so on. And but I think it's we have to decide. So first, if you issue assets on the blockchain, the first portion is like, is it like the blockchain, which is part of this asset, becomes part of this asset? What ESG data can be provided on the technology, but the main part is actually what is the asset underneath or behind the token, right? And this is where we need to create standards, data, models, and and then, as I said before, provide to the end user to decide which asset to buy, right? Because the ultimate goal should be that the user can compare the assets and pick those assets which are improving their impact on those three pillars, right?
Yeah, makes sense, makes sense. But do you also see kind of negative selection risk? So in other words, if you simplify the accessibility of projects, you also lower the barrier for low quality projects to get funding. Is this a real issue?
Yeah, I'm happy. Oh, sorry.
Go ahead.
Yeah, I'm happy to take this. Yeah, I think that's the old crowdfunding argument, right? If you don't have enough skin in the game, who's doing the due diligence? That's basically the thing. If you're investing, I don't know, 50 million in a fund or something, you can afford to pay 50,000 euros to a lawyer or to an audit firm to do proper due diligence. If you only invest $500, then it doesn't make sense economically, right? So I think you always stand the risk of adverse selection, but I think ways to mitigate it is to have a trusted party in the middle, even though it's centralized and somewhat going against the grain here. But if you have a centralized party with a solid foundation and valuation of the asset and doing a proper due diligence, then you can mitigate these risks. And maybe in the future we find solutions where token-based, you spend a portion of the assets that you're trying to allocate and do the proper due diligence as a crowd, right? I haven't seen that model yet, but I think that's something that we could aim for in the future. Yeah. But yeah, Chris, I think you have.
Definitely. Just to say, I'm not against centralization, as I said. I'm against the single point of failure. That's the very much point about centralization, is that when you centralize something and you're the only one to be controlling and you fail, then the whole system fails. And so I believe that there is points where centralized entities can be actually audits, due diligence, and providing information and certifying this information. But using an infrastructure that is decentralized on top, below it, means that if this structure actually for some reason fails, then the whole system will not fail. And so regarding the risks, yes, by opening this point, by fractionalizing those tokens, by opening to new projects, of course there is a risk. I strongly believe that and at the same time, I'm not agreeing with myself when I say that, but I believe in self-regulation. I believe that there is a point where entities should be able to do self-regulation in order to have those own standards. Before that, we deploy the standards, and as before, Tim was saying here from Xalvi, he was saying that as internet came, regulation came after internet, so we were already using those tools before. I thought it was extremely interesting, because if we wait for standards, well, never it's going to happen. That's the point. And so at the end of the day, I think that self-regulation is one thing, third parties regulation is another thing in order to control those projects. But I want to also say something. It's part of our responsibility as an investor to do what we call the DIOR. It's do your own research. And I believe that there is a certain level that if you have access to the information, because this information is available and transparent, and you're making the wrong choices because you decided to buy a Ferrari for 10,000 because you know that a Ferrari is not 20, it's 200,000, that is your choice. And this is what we call natural selection in some point. So if you decided in parts to have access to an information, not use it, and buy it, then it's on you. Now, I think we all have a part of responsibility to the investment side.
Yeah, it's a really good point to stick to. The own decision for making an investment is the one point. I think the other part is the role of the regulator. Do you see any need or an increasing demand that regulators should make a rule set for these investments or for these projects?
I always use this metaphor, but do you guys play Monopoly? I guess yes. Or Uno, like you have a +4 and you decided to put a +4 on top of a +4, but it's not the rule. You cannot do that. What I want to say about this is that when we play Monopoly, we usually change the rules in the middle of the game. And this is how you have losers and winners and frustration. What I like about regulations, and I am super pro-regulations, is that there is a framework. And so when you have a framework, you have the rules, then you're able to play with the rules. When you have no regulations, you have no framework, and then it's chaos. Then everybody's crying, then your nephew just want to kill you because he's trying to buy taxes on Monopoly. And it was a really painful moment last night with my family. But what I want to say is that regulation is a good thing. The problem with regulation is taking too much time. I mean, Mika is coming, so let's go with that. But at a certain point, when regulation comes, then big institutions can actually play the game, because then we know exactly what are the rules, and we know exactly what is the sauce that someone is going to eat us. So that's why I think that the regulation is a good thing, and it's something that needs to come to this activity and this sector and all the sectors in general, I believe.
Any further comment on this?
Yeah.
Evgeny?
But my question is like, okay, if you now look at the cryptocurrencies, which are completely transparent regarding the data, right? So there is data about energy consumption. There is data about distribution across wallets. There is data where the nodes are located, right? Actually, you can build a model which actually says, is Bitcoin 80 points or just 10, right, out of 100? But still, no one is using it, and no one is reflecting it, and no one showing it. And my question is like, hey, instead of writing the regulation, let's make a really small concept for this data to be available and start with the rating first. And then you can actually add 10 data points more, 50, 100, thousands, make data or model more complex. But actually, I see the regulation, and there's trying to cover everything. And I believe we learned with our companies that actually you don't build a product which covers 110%. But it seems right now that everyone tries to cover 110%. And this is, I think it's, at least for some of the areas, we could start with something small, create the data points, create a model, normalize the data, weight in the data, and provide the score. It's as easy as that. But it's it's really, if you look at the models from Refinitiv for existing models, it's really that those few points are there, and you can actually go on with that. Yeah, it's so building a product and showing the final investors how dirty or not dirty Bitcoin is, right? could be made really easy, but no, everyone just says, oh, it's dirty. Oh, no, it's not. Oh, yeah, maybe it's less dirty than something else, but there is no transparency.
Correct. Yeah, I agree with that. I think that there is two things that we need to fine-tune. It's a little bit of liberty and a little bit of equity. And so this is how do you manage to have the liberty and how do you manage to have the regulations in order, because regulations are not here to regulate. Regulations are here to protect most of it. So to not have frauds, to not have investors losing all their money. And the difference between cryptos and ESG tokens or representation of what is ESG security tokens. Security tokens represent real assets. It's a building, it's real estate, or it could be debt, it could be obligations, it can be equity. You have different regulations today in different countries. Luxembourg is one of them. Companies based in Luxembourg, so it's easy for me to be talking about this. And you're able to actually have a building that is owned by an SPV, and then you tokenize the equity of this SPV. Nice. Then you have actually a building that is tokenized. And so this is the difference between having a crypto and having a security token, is that security token is a real asset, it's an investment. If I invest money into security tokens that represent a building, and if I die, I want my kids to have my investment back. On cryptos today, if I lose access to my wallet, for some reason my apartment gets burned and I lose access to my tokens because I just put it on the paper, I lose my whole investment. This is not what we are talking about. Tokenization is not about tokenizing something and then losing access to a key and then you lose access to your investment. It's to be able to retrieve access to those tokens, to those assets. Basically, that's what Tokeny has been done with this ERC 3643. And regulation needs to be here because then we are talking about real assets. Basic tokenization is digitalizing traditional finance.
It's a really good point you just mentioned, giving a lack of current regulatory landscape there regarding the validity and reliability of the ESG claims that are made by tokenization projects. How can this be guaranteed that these are valid and reliable since we have a lack of these, let's say, industry standards here? Maybe Peter?
Yeah, I think it depends on which ESG criteria you're talking about. So if it's the blockchain maybe itself, I think that is relatively easily measurable. And I think that we don't necessarily need regulations for that as long as we make sure that companies are not allowed or projects are not allowed to straight out lie. So for example, if we talk about energy consumption of a project, that project could just display that or maybe even be required to display that. I think that's relatively easy, but then if you talk about the actual underlying assets and the import of that, I think that's the same question, at least in some aspects as before, because then again you need the right input data, and I think regulation regarding the tokenization aspect can't really do much, but you need to regulate what the input data is actually and kind of have some way of confirming that that data you put into the project or that you say that the specific ESG asset is about is correct.
Are there typically third-party validators in place that can be utilized for giving validity to these projects?
Yeah, so it definitely depends on what project. So if we again talk about carbon credits, then there are verifiers of these projects, so companies that come in and calculate how much CO2 projects removed. Maybe some of you have seen the Guardian and Die Zeit article about carbon credits that came out recently. So not all of these companies are actually doing a very good job, at least in some aspects. And that is, again, the same problem. We have verifiers for ESG projects out there that are or have to do a certain job, but it's very, very difficult to then guarantee that they're actually doing the job correctly. And I think that's one point where regulation is very important to just prevent organizations to, basically straight out lie.
Are there any... Or just go ahead, Evgeny.
Yeah, but I think what's currently also missing, so we did tokenization of ships from a shipping company from Hamburg, which complied with upcoming regulation for shipping industry, so that the ship has to use less fuel and so on. And it was already compliant with 2028 requirements. And but I think what's currently missing is that actually those companies can actually add to us. So if we have, for example, a standard model for CO2 certificate or ships, right? So we still need standards there where we could actually, those auditors or verifiers, whatever we call them, so that they can actually insert this data so that actually it will become available and can be verifiable by anyone, so that we can actually start calculating and adding to everything to this model, so that we can actually provide this transparency and compare the assets. And I think as long as we don't have those standards, it's like really difficult.
Is this also an instrument to encourage larger financial institutions for direct investments into fractionalized, tokenized ESG projects?
Yeah, I think given this data, you can actually combine. So given you have like multiple assets and maybe you're missing in your S pillar some scoring, good scoring, then you can actually add assets which actually point this problem and improve your scoring of your portfolio, right? And or of your product, whatever. It could be like a fund again, which is combination of different assets, and then you can actually adjust the scoring based on the underlying assets. And but again, for this you need reliable data and modeling and regulation, which actually standardizes those assets.
Okay, thank you.
Just to quickly jump on that, that's pretty much what Tokeny actually provided. When I said about the ERC 3643, it's a standard it's a security token that is a standard that is open sourced. Everyone here can use it if you want to. Our business model is that we sell a SaaS platform in order to deploy those tokens and also control them. What it embeds compliance. And what's actually one of the things that you were saying about fractionalizing is that once you hold a token, cool, I hold a token and I hold an asset, an ESG asset or financial product. But what do I do with that? I just wait long terms before I can actually resell it to the token issuer or to the traditional finance company that deploy it? Or can I actually create liquidity? And this is actually where we come from, is that at the point that you have a token that is now completely decentralized, that you have almost no cost in order to transact it. So you can buy it, resell it. You can actually open an access to also secondary market players that are maybe small players that can come and buy parts of it. And so you create liquidity into a market that is no liquid. And so this is happening today, not only about ESG products, but I see a lot of demands for real estate. So real estate projects that, in my opinion, is going to be the first market to be disrupted by the tokenization, because do you really need to own 100% of a home, of a real estate? When you're buying your home, you're buying 100% of it. Do you need to own 100%, or can you just own 51% of it and 49% you sell it to a secondary market as a financial product? And so by the end of the day, you're not in debt 100% of that asset. You're just 51%, and you have the usufruct, so you can actually live in there and do whatever is, your property, so you can do whatever you want to do it. But 49% of this liquidity comes back to you. And 49% of that liquidity that is on the secondary market, it's actually a financial product. When you buy a home here in Frankfurt, I'm not sure how much it is, but it takes maybe 4 or 5% a year. So at the end of the day, you create small actors coming into those markets because there is no friction. You have a framework that is lean, and you have low fees and low gas for those transactions.
Good, thank you. Any further comments?
Yeah, maybe adding on that, I totally agree that real estate is going to be one huge use case, and I think it's also prominent to if you have a function in tokenization process and you manage to build liquidity, etc., then just instead of rental properties, you put ESG compliant assets, solar parks, wind parks, etc. You have the infrastructure that's working, and all of a sudden you have an ESG trading platform, whatever. So I totally agree with the use case, and I think from a portfolio construction point of view, it's amazing what you can do if you let the clients pick and select certain areas in housing. So Yeah, I think we have a similar vision.
Exactly the point. And so you guys, or the bankers, or people offering actually financial assets, it's a diversification of portfolio. And it's just amazing. You're opening actually to small tickets. And the problem is that I'm poor. Every time that I'm trying to invest something, it's 50K and there is high transaction fees. I want to be poor, but I want to be able to invest small tickets. And this is actually what tokenization and blockchain can actually bring.
Yeah, so it was a really great statement, and let me back to my introducing question, my initial question. What are the measurements we could take to adopt a larger, to create a larger adoption within the financial industry? So maybe just a brief words about what advice would you give organizations looking to embrace ESG and tokenization in their operations and investment strategies?
Yeah, I think if you mention adoption, I think institutional clients like certainty, obviously, right? So you need the regulatory framework that was mentioned, but at the same time, you need to have regulations in place that allow smaller institutions to implement them also, right? So you cannot create this huge regulatory animal that only a few monolithic companies can comply to. So it needs to find a certain balance. So I definitely think regulation is a big issue. And the other thing is it's an educational topic. I think the clients, blockchain is super complicated, and the clients and the executives, they all need to get a more firm understanding of the whole underlying technology and the risk involved. And I think over time this will come, and especially tokenized asset, differentiated from crypto, right? But tokenized assets, I think, will become more and more mainstream in the near to midterm future.
So midterm future, is it a time frame 5 to 10 years, or what would your expectation on this?
This is only speculation, right? I mean, how fast are people learning? I don't know. I'm not a teacher, not a professor, but I would certainly hope in that time frame. Yeah.
Okay, what should we have to see in the next 5 to 10 years in this industry? Any further comments for you? Maybe Evgeny start first, each after another.
I would be happy if we, for example, talking about real estate, just let's put power consumption per square meter onto the blockchain for each tokenized real estate. As mentioned, so for me, I'm like really straightforward. So I'm trying to think how can we use it already. And this, for example, like one measurement which we already have everywhere. In Germany, we have like this passport, Energieausweis, for almost, and it's somewhere on the paper. And I'm just wondering, why don't we put this data on the blockchain? Actually, then you can already see it in your portfolio or in whatever your home is or something else, right? So it's starting somewhere. This is like the point. And with real data, real use case, so that the people actually get access to the blockchain, learn to use it, learn to love it, and because I think it's really a very good technology for transparency, right, at the end, and for verification of data. And if we start using it, even with maybe a few data points, it will already start helping people and banks and everyone to build products and services around this, and will also help companies to evaluate and make investors feel comfortable with the investments, right? So this is like would be my advice for everyone who wants to jump into this field.
Okay, perfect. So Peter, your brief advice you would give to the industry.
Yeah, I think overall the number one thing we need is transparency, and I think we need to normalize it that if people are investing in ESG projects or any other tokenized projects, the first thing that they're asking is what I'm actually supporting. And I think that this is already happening. We've had a couple of huge failed projects now, and now people are beginning to ask, what is actually the underlying thing that I'm supporting? If this is normalized, I think there's a very, very good future for tokenized assets, just because it gives liquidity, it enables fractionalization, etc. But this needs to be the case. Otherwise, I think the whole image of blockchain in some way is also, has a strong burden to carry right now.
And personal opinion, 4 years ago it was ICOs, so initial coin offerings. 2 years ago it was NFTs, and I strongly believe 2023 is going to be the tokenization year. Whatever asset is going to be behind, I believe that ICOs, it was the Far West, it was Texas, NFTs, it was just like gambling. Security token is not gambling. Security tokens and whatever you're presenting behind, ESG or whatsoever, are real assets. And I think that nowadays people are understanding what is the power of blockchain. And I think that this conference represents, if I heard Corinne saying, she has 600 attendees, I guess. So it's the biggest one that was for them. And I think I see everything's growing on this sector. So I strongly believe that tokenization is 2024.
Cool, thank you. Looking at the time and taking this as some brief closing remarks. So thank you everybody from our panelists being here in place, and thank you for all of you joining our session. And yeah, I think we have now 20 minutes break, and then the program will be in the main hall again. So thank you very much for joining us and attending here. Thank you.